Welcome to the Money Charts channel for Crypto Day Monday. Well, it's the end of Monday on my end, 21st day of May, 2018. Although it's almost the 22nd day and the price charts are using that day as well right now. Of course, everything is within your own risk, own reward. I got a lot to cover on Bitcoin again. So let's get her going. I've already talked about long-term, like multiple years in a most recent video. I am also doing a project on the Dow 30 and trading strategies similar to the ones I've talked about crypto. Unfortunately, I'm running through different programming problems right now, so I'm going to sleep on it for a night. It's going to be at least another day. But I did talk about bringing that up, so if you're looking forward to that, it ain't coming up tonight. This is going to take some time, again, to go over what I want to within this video. We're going to look at this on a 400-minute time frame. Because ultimately, what this market has done from the 10,000 high and the decline, it left the 18 in here, established a little bit of support with a bit of 18 resistance in here and in here, but it basically had this level of support in point. 18 resisted, and this area did not find support. And when areas that are supposed to do so don't, it ain't a surprise to have a quick move lower, or the leg that you would expect to have lower from such a decline to be that of fast, which was the case here. So then you have another test of this 18 average, and of course it resists again, chopping around within this little area here, but then making a statement, breaking this level of resistance. Hit here, stabilizing above it for a bit, or are we going to see that classic failed breakdown? And that, of course, would be the pattern of looking like this. There's your support. I call this the typical one. And that's a typical one, is where you barely break it. It's just a little small box like this on the chart, noticeable, and then it just falls fast below it. That's what makes this 18 average of low test so critical at this point. Because if it supports it and goes higher, I'll forget all about this possible failed break. It won't be a failure anymore, because that means the buyers that came in here at a critical, trying to revert the market situation, were correct upon it. The early wave of sellers came, they went, and the buyers were able to bring it back. That's what the bull market would successfully do. But in typical failed breakout fast move status, if you see the price in here, I wouldn't be surprised if it even goes further down to previous low. Now let's talk about highs and lows. They're known after the fact, and sometimes well after the fact. So let's look at a few more extra periods, and can we see any key highs and lows in here? Obviously we can. Got this high, got this low, this high, this low. This one here, tough to call, so I'm going to say no. But you can, if you want to talk about this low and this high, as if you will. The bottom line is a pattern has been that of higher highs and higher lows. This is an interesting point, because I'm going to look further amongst this. But the whole idea is 6,000 is monstrous support. Why is that area an interesting level? Let's look further back in time. And to do such, I'm going to just rewind it back even further, doing this. Where are the key highs and lows now? Well, we got this one. We got this high. We got this low and this high. Well, this one's easy. But in here, this was a spot where they were almost like a rectangular, barely making higher highs and higher lows. And and even going before then. Got this high, we got this low, and you know what, that's fine for now. So let's now bring this back to current price time, and since I can't look at all this data in one shot, let's just bring this to the daily chart. And notice within these circles that you can see the nice pattern of higher highs and higher lows with two really good rallies. This one really had hardly any correctionary moves. Very, very big move. But this one was bigger. But right in the middle here, this happened. Right in the middle. At least Malcolm might say that might be in the middle. I don't know. I'm just using a not so random name. But it's halfway from the last big move. And that's pretty big as far as an amazing correction, amazing via not going down too much. If all it's going to give back is half of its last correction, and it had many of them, or excuse me, the last half of its last rallies, excuse me. If it has many rallies, it's only given back half of its last. Yes. Within such, I got all those highs, all those lows. But we notice that 1, 2, 3 highs are lower in a row. The last 2 lows, well, the last one is matching. Now, as it stands now, if price action were to rally from here and go up towards this point, then it would be like, do I want to count this as a high and this is a low? But either way, what the price needs to do is get above some of these highs in order to really change this market. And it's got to get below this 6,000 before you can even start saying, okay, 3,000 is coming. Because even if it's at 6,100, well, we're at an area of possible support. I'm not optimistic, but I've seen markets do this before too. So it wouldn't surprise me if it keeps on making a pattern of matching lows and lower highs for a little bit longer. But another way that I'm looking at this is the numbers that I've been talking about for the last couple of weeks, where, and I don't got the Fibonacci lines on here, but they're easy to remember: 6,000, 3,000, 1,000. The levels that, okay, I lost my train of thought because what I wanted to talk about was you have this trend line in here. Actually, now I know what I wanted to do, but I forgot all about what I wanted to talk about with this point right here, so that's good. That's good. I got one more thing I want to talk about after this, until we go to short-term analysis anyway. But it's broken this trend line, so that's all bullish. So here's your statement on the break of trend line that it's ready to go. And maybe this isn't a straight one, but since it's broken above the resistance, that's fine and dandy. If you can make the higher low in here and then it goes higher, that's exactly something you would expect an outcome for such an event of the break of the descending triangle. But that doesn't necessarily mean, because it's broken the trend line, that it's all bullish, ready to go, because it's got to get above these key points. And any move towards this level, yes, things become more likely to be not so great as far as the price is concerned, but you're still in that neutral phase. I'm going to talk about that price level now, and I'm going to draw some lines on here. So let's remove the drawings and put a rectangular box, a rectangle basically in. And I'm going to do one first on the lower level, because I've been mentioning the key numbers around 7,500-ish or so. But we'll draw one here. And then it's got to get above well over 10,000, even well over 10,400-ish or so. So I'm going to draw a line closer to 10,000, or even in here. Something like that. And even really, this line should be supported down in here at 6,000. Now what these lines represent to me is the early part of what it needs to do. Because if it's staying within here, which it is right now, that means it is not in an area of looking very bullish or bearish anytime soon, thus neutrality. And it's got to get to one side or another to get to its early stages of what that move would be. 4, price breaking down below the 7,500-ish point, anywhere down to 6,000, will be putting the market, the Bitcoin market, into a very, very cautious one. Something as a day trader, you'd probably be looking for bear market opportunities and whatever you would expect alternate coins to do based on a Bitcoin bear market at that time. Price action in here, you'd be doing for the opposite. You'd be looking for bullish opportunities in the daily term time frame, and what altcoins would do within such. On a break of either one, so a break of the bottom end of the rectangular means below 6,000, I would expect the price action to go to 3. That doesn't mean it can't do any type of failed breakdown fast move, and this is for either direction, for both the up or the down. But if it does such, what I would expect, and the typical move for failed move is you have a key level. I know that's not, the line's a little higher than that, but you barely break below or above it depending on which side. You basically make a small rectangular, which is what this would be, and you come back quickly to where you came from. I'm now calling that the typical failed move. And that's the ones I've seen so often a decade ago and on gold, silver, and other stock historical markets. So that's one of the possibilities that can come into play. But if you see the price breaking below here, having a fast move to these numbers, extra volatility, totally in place. And then, in a situation of the bear run, the closer you get to 3,000, the more you're talking about bottoming possible territory, and as far as a trader is concerned, what I would consider great buying opportunities. On the break of resistance side, that means back into bull market territory on the break above here. Whether markets would have moves like we see here where they skyrocket higher, whether you have bull markets where it grinds its way higher, you would expect a full-fledged bull market of some sort. Again, I gave 2 ideas of what a bull market would be like on a situation as it's breaking out above here. So it's just going to stay in this neutral market until it goes to one side or not. You can have a lot of wild swings up and down within, of course, its trading range, and of course piercing a bit below until it makes its move. So this thing could easily chop up and down a bit before it makes a move to whichever way it's going to go. And that would be it for that subject. Let's just finish this off looking at some shorter term time frames. The markets were showing negative sentiment short term. This is again where we started the 400-minute time frame, and that typical move that I talk about where you have a key level. This is basically what you're looking at, and I hope I said at the start, but I'll say it again. But if you do make the higher low in here like this, you totally forget all about this possible failed breakout, and thus the rally is doing what it is supposed to. Let's shorten this out even more. Look at this next on a 3-hour time frame, which has broken down below this 18 average within. It hasn't had much of a move since trying to get above. In fact, just showing more of the typical failed break. I mean, I already highlighted it, but it's just part of that failed breakout that was shown. Actually, wait a second here. No, this is a totally new one, I think. Yeah, because this one in here. Anyway, let's move on to the single hour time frame. And when you have a key, I started talking about key high, key low, so obviously key high, or key low, key high. Obvious break of any type of support line you want to draw there. This empty space fill is starting to fill some of it now. You can talk about a 61.8% down move, usually around here when I see a market like this. As far as how this 18 average played out, we already see on the short-term time frame a little bit about a failed move in here, but here's the spot where you come down to where you came from here to this low. And before this big red candle, you can't assume that it's going to do it, but it's obviously got a band starting to roll over before this was happening. And then when it did, you have a decent leg lower. You know that's not a surprise because you've established this level of support. You hit this level. How are you going to swallow those losses? Well, they swallow the losses with this little bit of congesting staying within it. The one surprise here is that it barely made a lower low. I would have expected it to come down to where it is now within this move here, but it didn't. It comes to the 18 average, and now it has managed to come down to this point. Let's remove the drawing tool so I can see it better. It's gotten past this low. That's already deep enough. It could be lower. So it's going to have its next test of the 18 whenever it's ready to do so. It's got to do it via price by getting up right now to 83.50. Or it's got to take a few hours to just digest these gains going sideways for this to work its way to the downside to thus have that of a price correction through time. But right now you see on this time frame lower highs, lower lows. And given that this line right here is pretty much around 38.2%, I can just blindly tell just by looking at it that it would be around here, that I would totally be expecting that this thing now to be just confirming me just now that this would be going to that general area. And just now is when it broke because of how it fell within here. Just somewhere around here is where that would confirm to me. But even the fact that I've seen it break below, if I look at this even shorter term on the 15-minute time frame, yeah, this is enough on that confirmation because unless, of course, it's going to do a failed breakdown. And I can easily do that. You don't know when big buying money is going to come in. But this key level in here has just obviously been taken out. And there's been a good hour or so to digest this decline. And it's doing so in this declining fashion. So that 61.8% correction I would see coming into play. And when something like this happens, when I see a pattern like this, that means if you're to trade something, maybe you're trying to quote unquote short something. This is an area where you try to get a buyback. Maybe you look for an opportunity to do it now because you're thinking, okay, the target for where it would go would be low 81s. Right now it's 82 mid. So you're getting a little over $100 on the play, 1.3%. Maybe you're going to put a stop up above here. Ooh, this is just not fun to do. You're talking about 84.50. You're talking about a differential of about 170, a 2% move. You're putting a lot of risk on the table. So if I were to ever play something like this, I've already seen it break down a leg below, so I don't want to get into any betting against it now. But what I would do is if I see any type of price come up a little higher and meet up within somewhere around this 18 in here and start to roll over, as it's rolling over, then that's where you would consider, or if I was playing the game, consider playing a short position, then put a stop over the high in which it would then roll over from. So if you were going to do it back in here, and I'm going to remove the drawing tools again, and maybe you were looking at the market back in here, you're like, oh man, I want to see it rally up. Okay, it rallies in here. So this period you do nothing, this period you do nothing, and here you do nothing. The only way you're doing anything on here is if you're betting somewhere around here, as it was breaking down, for it to go lower. If you didn't do it that period, you should have done it here, because when you see the preceding period to this one in here, what we notice is within this here, it had its low breaking noticeably below the 18. It had a little bit of rally just because of that line, and then it's starting to break down again, so roughly around here. And then by having a position at this point, you're talking about a stop up here, which means you'd be getting at about 84.55 if it loses. You would enter at about 83.22. That would be a difference of about 120 or 1.5%. And again, when you're looking at Fibonacci, you're looking at going about somewhere around here. So we'll say 81. You're not talking about a 220 point differential in price. You know what? Not too bad odds if you consider this from a risk reward standpoint. Something always good to look at in a play like this. I know I would sell here for profit. I know I would get out somewhere out here for a loss. So then you calculate your move, and this is like something like poker talk for me. It's like pot odds, if you will. So this here, if this is say 10 basis units, that's your risk. And then to your prior target, this might be say 20. That means if you were playing a setup like this, if you were to win much greater than 33% of the time, you'd be a winner. For if say you played these odds and you got 40 wins and 60 losses, 40 times 20 is that of winning 800. And then the 60 losses that you would have, 60 minus negative 10 is negative 600. And then you'd be up a difference of 200 units. So just something to think about. And I'm going to end this video. This is long. Actually, I'm going to quickly take a look at some of the alternate markets. See if anything's keeping my eye right now. Yes, holy crap. What's going on with TUSD? Steam is doing okay too, but just what's going on with Steam? That one really just, wow. Okay. Let me pause the tape for a second. Actually, no, I'm not going to trade this. That's only a 5% gain. But TUSD, Bitcoin's not doing that. Is this another one of those like cycles back in here? This thing has just broken 12,000 and change to 14. And I don't mean OME's go, but OMG. Let's take a look at TUSD and USDT against the tether, because it's got to be breaking out against such. And it is. Interesting how this followed through. Because let's look at this here for a second. This is how this was designed. You're trading one fake US dollar against another fake US dollar that represents, of course, the US dollar, which to me is fake gold. It's a misrepresentation of that of money. It's counterfeit money as far as I'm concerned. So this is supposed to trade around 1. A little bit below, like 0.995, okay, or 1.005 or 1.1007, that's fine. That's normal trading. But then this happened where if you had any form of TUSD, if you sold it at these higher prices, magnificent. But what the heck happened within these two periods here to spark this? Because, and I'm going to have to shorten the time frame out, and I'm going to do so. But you have this normal trading here. Then you have this interesting green day, which is not like the rest. And I don't count this having a bigger green size because it obviously it was an area where it normally would resist. It gives that red move back on high volume. And then this one, well, I can't count volume for this with 4 hours left, but the move that came through this, just interesting. Let's take a look at this on like a single hour time frame next. So first remove the drawings. Increase the amount of periods. Single hour time frame. So yeah, it started right on this period here, breaking out of this exact thing that it trades from. Gives it back on this to its normal trade, but notice how it's staying at $1.02. So the entire long-term range, and I think a horizontal ray is the only way to go here. So that's, yeah, like notice that the support post original move on TUSD, how its resistance has become support. Am I supposed to assume that after this comes back down, it's going to find support at $1? Well, 102.194577 ish. Well, I just find that very, very interesting to say the least. There's got to be some sort of news going on about this. I mean, if you have it, I guess I'd probably want to sell some, and then if it keeps going higher, sell it again, and then buy it back when it comes to close to $1. I don't know what else to say about this. But anyway, thank you for tuning in, and have yourself a great day. Bye-bye. I said bye-bye. Bye-bye. What don't you understand? The buh or the bye?